Stocks sell off on Wall Street as President Trump confirms the imposition of tariffs on Mexico and Canada. Higher than expected jobless claims also spark concerns over the health of the economy. GDP growth for the fourth quarter, however, is in line with estimates at 2.3%. Asian markets have opened largely lower on a weak handover from Wall Street. The GIFT Nifty is also indicating a gap down start for our own markets. Brent crude rises 2% to $74 as supply concerns resurface. The United States cancels Chevron's license to operate in Venezuela, while the threat of a tariff war also leads prices higher. Gold prices have hit a two-week low as the US dollar strengthens. A CNBC TV18 poll indicates that GDP for the third quarter will come in at 6.2% compared to 8.6% a year earlier. Agriculture, construction and government expenditure are seen growing the fastest. Finance Secretary Tuhin Kanta Pandey is appointed as the new chairman of market regulator SEBI with a 3-year tenure. Current chief Madhabi Puri Bhuch's term ends on the 1st of March and Tuhin Kanta Pandey will take over from Monday, which is the 3rd of March. It's the final trading day of the week, the final day of the month, the start of a new series. There is a lot to watch. You're watching Power Breakfast on CNBC TV18 in the Mumbai News Center. I am Hormuz Fatakia. Let's first take a look at how the Asian markets are doing today. And the screen does not look good by any means. And the handover from Wall Street has resulted in a sharp sell-off across the Asian equities as well. The Hang Seng is down 1% after being a rank outperformer all through the month of February. The losses, though, are predominantly coming in from Japan. The Nikkei is down almost 3% in today's session, as is the Kospi in early trade is down almost 2.5%. So negative cues coming in from Japan and from the rest of the Asia-Pacific market as well. China too is trading below the flat line after being an outperformer in the month of February. Pull up the GIFT Nifty as well. That is no better. A gap down start is what the implied open is indicating. So most likely we'll open below that support of 22,500 on the index. So 142 points lower is what the implied open is suggesting currently for our own markets as well. And all of this is courtesy what happened to Wall Street overnight, because all the benchmark indices ended lower. The Nasdaq fell almost 550 points. The Dow is down 200 points, but more importantly, it fell 650 points from the lows of the day. The key trigger today is the January data for the Personal Consumption Expenditure Price Index, or the PCE. So that will be a key data point to watch out for later today. CNBC's Bertha Coombs gets us a wrap of all the action on Wall Street.
U.S. markets lower across the major indexes in Thursday trade, with the Nasdaq on pace for its worst week since September, driven lower by Nvidia, which fell more than 8% despite reporting better than expected earnings on Wednesday evening. The Dow down 194 points, the S&P 500 slipping 94, while the tech-heavy Nasdaq tumbled more than 530 points. Among the big drags today, initial filings for unemployment benefits in the U.S. hitting their highest level of the year last week. Another sign the labor market may be weakening. Labor Department said Thursday that weekly jobless claims totaled 242,000. That was up 22,000 from a week ago. As the Trump administration attempts to remove thousands of workers from the federal workforce, unemployment claims in Washington, D.C. shot up 26% to just over 2,000, figure that is consistent with the surge from early January. But the trend of rising claims from federal workers doesn't seem to be spreading to other areas with large numbers of those government workers. Meantime, President Trump saying Thursday that his proposed tariffs on Mexico and Canada will go into effect as planned on March 4th. The 25% tariffs on imports from both countries were paused in early February for 30 days. In a Truth Social post, the president added that China, which already faces U.S. tariffs on its goods, will be charged an additional 10% tariffs starting next week as well. The president has made tariffs a major piece of his agenda, telling reporters at the White House Thursday that these latest tariffs are intended to help curb the amount of fentanyl being illegally brought into the United States. That's what's happening here in the U.S. Back over to you in Mumbai.
Now, Managing Director at UBS Private Wealth Management, Ali McCartney, says that the president is using tariffs as a negotiation tool, and he remains positive on the growth front. Listen in.
Administration, this president particularly, uses tariff conversations and this ping pong as a negotiating tactic for many other things. And what he ultimately wants and monitors is the value of the S&P 500 and the value and the level of the 10-year. The 10-year has now gone down 50 basis points since mid-January, which is exactly what he and Besson have said they are trying to do. And so that when you have this sort of all three legs of the stool, ultimately the micro, the macro, and the sort of secular trend of AI all pushing tailwinds to a president administration who wants to see growth and dampen down inflation, I'm going to lean into that.
It's all the global market action that we have for you, but how will all of this overnight action impact our own markets? Our research team is joining in with the trade setup, the stocks that are likely to be in the news, and of course the setup on the FNO side as well. First up, Vivek joins in to get all the market cues we need to watch out for. Vivek, good morning. Not a very pleasant end to the week and not a very pleasant start to the March series as well.
Absolutely right. The Hormaz, February series, fifth trade series, where you actually saw the Nifty declining. So very weak cues coming in. Now when you're talking about the overnight cues, global cues, especially Nasdaq, yesterday saw significant selling pressure. Nvidia was another stock that saw significant selling pressure post results. Oil prices, on the other hand, actually saw a 2% rise, so it's a double whammy. This on the back of worries as far as tariffs are concerned. Now Brent now hovering around the $74 a barrel mark. Indian markets, like you mentioned, February series was one of the weakest. Yesterday, what did very poorly? You actually saw the entire cable and wireless back, and also Ultratech Cement on the back of its announcement of capex into the WNC segment, actually seeing itself taking a knock and the entire pack taking a knock as well. Banks and NBFCs, on the other hand, on the back of RBI easing, saw significant buying, and it will be interesting to see whether that can continue. Oil eyes today on whether the March series can start on a positive note. One very important cue today is the fact that the MSCI rejig will happen in the session today. So $1.4 billion of inflow is what India is anticipating, and that is going to be interesting to see whether today evening the FI figure can be positive. Overall, weak cues, a weak Asian start, GIFT Nifty also indicating a gap down start for a market.
Gap down start indeed. Vivek, thanks a lot for that. And that also means that the 22,500 support is under threat. We'll hear more from Sud when he tells us more about the FNO side as well. But some stocks that you need to keep an eye out for today. Of course, it is the start of a new series, so we'll have new entrants in the FNO space. The likes of Tata Technologies, Ireda, IIFL Finance, Patanjali Foods, Titagarh Rail and Amara Raja. These are the 6 names that will begin trading from the futures and options contracts from today. So these are the 6 names that you should keep on your radar today. Granules India is also something that should be on your radar because the much talked about Gagilapur unit has received a warning letter from the US FDA, and the company has said that this may temporarily impact the review of pending product submissions from this facility. It's a key facility for the company. The stock has seen a bit of a knock as well because of this, and they are confident that will be resolved in a timely manner is what they said. Now Coal India as well, because they have levied a 300 rupee per ton charge uniformly across all the northern coalfield units that will be effective from the 1st of May, and because of this they are expecting additional revenue from almost around 4,000 crore rupees because of this, and northern coalfields has contributed to nearly 19% of Coal India's dispatches in FY25 so far. Now earnings reactions, KSB, some of the others that were reporting results that were left, revenue and EBITDA growth of 20% year on year, margins also expanding 50 basis points, so keep an eye out on that. Schaeffler India, where the revenue and EBITDA growth was in the low teens, the margins though have remained flat on a year-on-year basis. And Sanofi, the MNC pharma company that reported results, the net profit was down almost by a third, but EBITDA growth of 20%, there is margin expansion, and they've also declared a dividend of 117 rupees a share. On to some order wins then. Transrail Lighting has won orders worth 2750 crores, mainly from the T&D business, and this has taken the year-to-date order flow in FY25, that is, to almost 7,500 crore rupees is what the company has said. Now Tata Power, where its arm TP Solar has won orders worth 632 crores, that is from the Solar Energy Corporation of India, and that is to supply 292.5 megawatt peak solar modules as well. So keep Tata Power on your radar. Mangalore Chemicals, because the BSE has issued a no adverse observation certificate in the scheme of arrangement with Paradeep Phosphates, so keep that on your radar. And lastly, a couple of names where the shareholder lock-in is ending today, that is Delta Water and Infra and Premier Energy, so keep all of these names on your radar today. And lastly, Sudarshan joins in with cues from the FNO space. Sudarshan, welcome back. Well, the GIFT Nifty is welcoming you with a shade of red.
Good morning, Hormaz. So we start March series, and this is also the last month of the fiscal, that is FY25. While we have big hopes from this month, but as far as sentiment is concerned, it remains weak. And talking about yesterday's session, we saw Sensex and Nifty closing with minor, like it was little change that we saw with Sensex and Nifty, but fall in the mid-cap index has continued. Yesterday also, mid-cap index was down almost 1%. And in the last 5 series, where Nifty has seen a fall of 14%, and it's the first time since 1996, that is in last 29 years, we have seen Nifty consecutively falling for 5 months. And if you talk about in Feb, it was down 4%, Jan 1%, and it had started from October 2024. In that month, Nifty had fallen 8%. So how are the last few March series? Normally, historical data suggests that after a big fall that we see in the month of Feb, we normally see a minor jump or see a jump in the next month. So in March 2024, it was up 2%. Again, March 2022, it was up 7%. And similarly, even in 21, it was down 5%. But in the previous month, it was in the positive territory. Now, talking about the institutional flows, yesterday, FIs have sold nearly 600 crore, DIs have bought nearly 1,730 crore. Even the index futures, FIs have bought more than rupees 950 crore, and they have reduced long positions by 9,800 contracts, but at the same time, they have reduced short positions by almost 36,000 contracts. And with this, FIs longs were now reduced to 16%. On the client side, long exposure remains at 73%. So what all options were active? On the call side, 22,600 and 22,500 call options were the most active ones, and on the put side, 22,500 option was the most active. So what does it suggest? That 22,500 remains very important level, but as far as today's GIFT Nifty indicating, it's indicating that Nifty is likely to start below 22,500. If we fail to hold the level of 22,500, Nifty is likely to slip to levels around 22,300 or below that. So support is concerned, as far as per yesterday's data, support for Nifty is 22,500 and resistance is 22,800. Two stocks that I'll keep an eye on. First one is AU Small Finance Bank, and second is SRF, if we see the follow-up buying.
Interesting there, Sudarshan. Thanks a lot for that. The GIFT Nifty indicating a gap down, a start below 22,500 for the March series. Take a short break. Up next, the third quarter GDP numbers will be released after market hours today. We get to your preview after the short break. Welcome back. Now, GDP numbers for the third quarter is expected to be released later today. Latha is joining in with what is expected from that. Latha.
Q3 GDP number, which will come out on Friday, is crucial because the Q2 GDP was such a heart attack that everyone is waiting for some kind of recovery, which hopefully will be seen in the third quarter GDP. That number is expected to come at 6.2% according to our poll, compared to 5.4% GDP in the second quarter, and much worse than the year ago Q3 number, which was 8.6%. Now, the year ago numbers were distorted by net taxes and subsidies. So many economists are looking only at the GVA number. They say that the Q3 GVA will come in at 6.3% according to our poll, lower than the 6.8% year ago, but higher than the Q2 number, quarter ago number, which was as bad as 5.6. So clearly GVA will show recovery. Just a word, Q4, that is the current quarter, which will be announced only in May, that is expected to come at 6.4, is expected to come at 6.7, and the full year, current year, is expected to come at 6.3%, which is still lower than the 6.4, which the MOSPI had forecast for the current year. And remember, the Reserve Bank for the current year was still standing at 6.6%. But our poll says we will do only 6.3. The important number is the Q3 number. Within Q3, as I told you, the GDP itself is expected to come at 6.2. It will be pushed up because of agriculture, which is expected to go very strongly over 4%, construction over 8%, and government expenses, because government capex has been so good, that's expected to grow in double digits. That is what will give GDP the real push. Now comes the caveat. On February 28, we are going to get the Q3 number. We are also going to get the revised estimates, advanced estimates for the current year. That will not be so important. We will get a revised estimates of last year, Q4, and the second revised estimates of FY23, the even previous year. Now, what happens when these base years, if they are revised, then the current year gets revised completely. So all our poll is subject to the fact that there should not be big revisions in last year's numbers. But let's see what February 28th throws up.
Lata, thanks a lot for that. All eyes later this evening. Now, the Appointments Committee of the Cabinet has appointed Finance Secretary Tuhin Kanta Pandey as the new chairman of market regulator SEBI for a period of 3 years. The tenure of the current chairperson, Madhavi Puri Buch, ends on the 1st of March, and the new chairperson will take over from Monday, which is the 3rd of March. Pandey has served as the Revenue Secretary since January this year and was previously the Disinvestment Secretary as well. Take a short break. Cues from the commodity side on the other side of this break. Stay tuned. Welcome back, and Manisha Gupta now joins in with all the updates from the commodity space. Manisha, good morning. Some bounce in crude oil prices, but gold seems to be losing some luster.
Oh, well, absolutely. If you look at the crude oil prices, we've seen 2% of gains in the overnight market. But even with that, it's trading very close to its 2-month lows. And it's the first monthly decline in 3 months that the crude prices seem to be headed with for the month of February. But the global economic growth slowdown concerns and the U.S. tariffs on Mexico and Canada to take effect on 4th of March is what's bothering the markets. Also, there are additional 10% U.S. tariffs coming in on China as well, and that's led to most of these base metal prices declining as well. It also is a decline that we've seen continuing for the precious metal prices, where gold is now trading at 2-week lows. We have silver prices declining 2% overnight. Even the raw sugar prices fell by 3% overnight. So most of the commodity markets haven't started Asia on a positive note. And to add to that, there also is the strength in US dollar index, which is weighing on to many of these markets right now.
Indeed, Manisha, thanks a lot for that update. And with that, we call time on this edition of Power Breakfast. From me and the team that put this show together, thank you so much for watching. Bazaar Morning Call sets you up for the day's trade.